How you doing, Adam?
I'm doing pretty well. How's it going over there?
Good. Good luck in your. Well, we're having an interview, but you look like you're dressed up for an interview.
Yeah.
Hey, you know what? Great calls that you made. I was telling the community in April you were looking for stronger equity prices, stronger Bitcoin prices. They both manifested in spades. So I'm very curious what you have on the docket for June. And then we could also talk about a few other things that might be on your mind.
Yeah, I mean, seasonals have been pretty good so far this year, all the way around. I mean, we didn't talk in May, but it was a month of euro weakness, and it kind of goes without saying that the euro really took a dive in May. For June, it's an interesting one again. I mean, it's a weak month for the dollar in general. I think the dollar index is down 9 of the last 11 years, and so it's not a lot of weakness in the U.S. dollar, but it's a soft one. I mean, it's going to be interesting just in the next few minutes. I'm trying to watch at the same time these tariff announcements, and if the U.S. is going to get really aggressive with tariffs, I don't. We'll see what the blowback is going to be on that. I mean, I think the market's a little bit off guard here for whatever's coming. So, but there's a lot of this week left to trade here yet.
What's your take on tariffs and trade wars, Adam? I've talked and heard both sides. I've actually heard more, though, that a trade war would be bullish the dollar.
Well, that's what you think, right? On a risk aversion. I mean, positive for the dollar, except maybe against the Swissy and the yen, and is certainly negative or positive for something like dollar CAD, and then the euro probably even as well. But we'll see. There was some U.S. dollar selling earlier in the year on trade war talk. I mean, if they can't come to an agreement on tariffs with Canada and Mexico on steel tariffs, then you start to have to wonder if anything's ever going to get done on China. When you get that U.S.-China trade war talk going, you start to see the U.S. dollar weaken off. And certainly the last few headlines, I mean, we had Mnuchin 2 weeks ago talking about putting the trade war on hold, but since then is really deteriorated, and I'm not sure the market has been really on the ball on that. Italy's stolen all the headlines, stolen the front pages, and naturally that with Italy just blowing up in the bond market, but there is nothing really positive happening on the trade front, and I think the U.S. dollar could struggle on a few of those fronts. I mean, at the same time, the euro can bounce back. Italy's always a mess in terms of politics, and I think the worst is probably behind us there.
Okay, and the market agrees with you. I mean, the schizophrenic behavior, it was like, it was like the Greece crisis all over again for a day. And then the S&Ps break, they come back all the way 34 handles, 40 handles here. So any outlook, sell in May and go away in the indexes really didn't work again. So
well, June is the month. If you look seasonally, especially over the last 10 years, June is weak. It's the second weakest month in the S&P 500, the weakest in the FTSE or close to it. It's a weak month for global equities almost universally. And I think that's a little bit more of a straightforward trade on trade problems and trade wars. We're at the end of May here now. June doesn't look good for trade. The global economy isn't exactly shimmering, and the Fed's probably going to hike in 2 weeks, and the market's not going to like that a lot. So, there's a pretty good case here for getting away from equities seasonally, and I think fundamental.
And I don't you agree that the market is, in a way, signaling that by funds being gravitating towards the Russell, which they're more domestic companies and won't be as affected by a trade war. Therefore, Russell at new highs, compared the only index at new highs. NASDAQ's the next one that has the best shot. So maybe the Russell is confirming what you're saying, is that people are rotating into domestic companies, but they're going to be worried about being in the mega caps that have trade war and dollar exposure.
Yeah, there's a good case globally for staying in domestic focused stocks anywhere and avoiding kind of multinational companies that are heavily dependent on trade, especially trade in commodities or farm products or anything automotive that might be easily or the target of a tariff. So, you know, we'll see what happens here just in the next hour. I mean, Ross could walk it all back and provide another extension. They said there would be no more extensions. The Washington Post is reporting that tariffs will come, but I just don't see how it can happen in NAFTA that like an automotive part will cross the border like 20 times before it gets into a car. And the headache on a tariff on something like that is insane. It's almost impossible. I mean, you look at auto share stocks, they're not really worried about this. So it's just not adding up right now. I mean, I think all will become clear that this briefing is running a little bit.
I mean, the whole supply chain could break down that people don't think about is that it's not just going to be the price, but when you talk about how complex it would be with tariffs, that you needed a part, you know, that makes me worry about whether or not that part's going to be available in great supply. And I'm sure there's many necessities that come from loony land that we need and many things from here that you guys need.
Yeah, it doesn't, I mean, the way the market's trading is trading as if nothing's going to happen for the most part. I mean, there are a little bit of jitters here. So if he comes out and announces tariffs, it's a complete here, although it really should be. I don't know, it's just not adding up in terms of how the market is reacting. But I think the risks to me are all towards the negative side just in the next little bit here. Certainly Canadian GDP wasn't great, and so we're seeing dollar CAD just tick up to the best levels of the day. Those nerves are real, and they should be more, but you know, you're just coming off the Bank of Canada, which was hawkish yesterday, so it's tough to square. I mean, oil's up today, so
okay, you brought it up.
So
that was my call of the year at 72.80 short, risking a buck. I had a three drive, the third of third up there last week. So crude went to targets that I thought would take weeks to get to in a week at 66. So does this kind of play into, you know, weaker oil? Maybe we rally halfway back or something to 70 and we get another wave down in oil, kind of play into, although it's not as big of a part of the equity market, it does make up, I think, about 16% of the index, and wouldn't be helpful if crude, which has been kind of a leader besides some techs, after this bounce fails and we go to 60 bucks. What does, go ahead.
Really any of the tailwinds for oil, it's a bit overbought. You have these stocks that ran up a lot, but they have pretty good yields on them. But, you know, OPEC is the story, and if they're talking about easing quotas, I mean, I mean, Venezuela is not getting better, but it's not really getting worse. So you have more production there. Shale's approaching 11 million barrels per day in the U.S. So, you know, I
You're bearish oil now, Adam? You think this was very
bearish? I mean, I've been bullish, but I don't see anything to push it much higher, meaningfully higher from here.
Okay. How about lower?
It's around the right time for a stumble back, you know, in the low 70s.
Okay, you mean so a recovery back towards the 70s you think is viable from here?
Yeah. That's
okay. Okay, and that whether it's a failing rally.
Interesting season. We were set to talk about seasonals. The first half of the year is generally strong seasonally for oil, and the second half is weak. So that seasonal strength kind of continues a bit through June. But setting up for the second half of the year, I think you want to, you can sell oil on any kind of an uptick, and I think ride it out, expecting some weakness in July, August, September.
Okay, and how about the PMs? Where's the seasonals at? The precious metals.
Yeah, there isn't a lot here right now. The gold trade it's flat for the next couple months. An interesting one is Swiss franc. Look at it; it's the strongest month for the Swiss franc coming up. I mean, we've seen that weakness or that strength already in the last month. But if you look at some of the turmoil in Europe, possible trade war, the Swiss franc is, I think, really one to look at. It's a solid month for the euro as well. So maybe not be via a dollar Swiss would probably be the one to sell, I think there. But yeah, not a lot in metals.
Anything in Aussie?
It's the third strongest month for the Aussie and the Kiwi. It's not super strong, but it's a little bit better of a month for the Australian dollar. But that really reflects sort of U.S. dollar weakness more broadly in the month. It's not especially strong against the field.
Well, brother, when you and I get together, we cover the gamut in the most efficient way. You know, I mean, we get through the whole board. Anything you could think of I didn't ask you about today?
Yeah, we touched on a lot.
Anything on your mind that I haven't picked?
You know, I think just Italy, coming back to that, I think this is probably the worst of it here now. I mean, I don't think anyone out there is really buying Italian bonds, but I think for stocks, bonds, I think we're about to get a handle on it. We may have a government, it might not be so bad. I think if you look at the long history of Italy, it's really one political crisis after another since the end of the war. And, you know, it doesn't meaningfully impact that much. Yes, we're going to get deficits again. I mean, it's a fiscal basket case of massive debt, but I think for the next 3 or 4 months, the market can't be focused on Italy every day. So, you know,
it won't be until their next elections, Adam. Is that what you're thinking? Until they call their
now? I mean, the headlines change every minute, but they might let them form a government again. So, you know, and then what they pass. I mean, no one's doing anything that radical when it comes down to it.
Yeah. How about our bond market?
And I mean,
our bond market had such a nice short squeeze, and you had record short positions, and that rally was so vicious. I believe it squeezed the short so hard that their eyeballs popped out. Do you look for a continuation move in there in treasuries and lower yields here in the U.S. during this time frame?
Yeah, the specs have been just killed on so many fronts. I mean, the market was so long euros this year too, and it just got cleaned out lately. And it was short Swiss francs, and the same thing there. And in bonds, I mean, I think that level was up in 30s. People were watching 10 so closely, got to 323, up above 3, and 30s it was 325 is this major level. If you ever pull up a chart, I mean, it's just an obvious level, and we just touched above there one day, came back down. Bill Gross was talking about it. Jeffrey Gundlach was talking about it.
Yeah.
And that was really the wall, and now we're back below 3%. I don't know if we ticked above that again on 30s, but the bond market and the Fed is, you know, are sending two different signals right now. We're up around 80% for the Fed hike in June. I think that really has to happen. The Fed doesn't really have a chance to walk that back anymore. But beyond that, the market's like kind of 50-50 or 60-40 towards one more hike this year, while the Fed is still talking about 2 or 3 more hikes. So there's this divergence there. But I think if we start to get stocks kicking and screaming in June, the Fed's going to dial it down, and that's what's going to pull down the dollar. So it all starts to add up a little bit on dollar weakness.
Okay, we have it cased, and you know what? When you talk about famous people, Adam, I don't know if you've noticed it, you know, like Gross and Gundlach and all these guys. I've actually found that some of your more famous financial stars are better marketers than market players. And that unknowns like Adam Button, who's known by a much smaller audience than them, could dance circles around them. So, you know, it's great to have, you know, a humble guy like you come in and give us information that people don't normally get to see if they watch CNBC. So thank you so much, Adam, for being with us, and have a great June, a great summer. And I always appreciate having you here with me, buddy.
Well, I hope you're doing well, Dale, and hope you're enjoying everything down there, and have a great summer yourself. Thanks so much for having me on.
Okay, we'll talk soon. Everybody, Adam Button, you could follow him and see him at Forex Live. Adam, if you want to show the Forex Live website, so people could take a look.
ForexLive.com. We're going to have a seasonals package up today. I'm not sure which screen I'm sharing there. So,
okay.
Yeah, we'll have a full seasonal package up. We're going to have these tariff headlines here and some analysis on that as soon as they come. I know they wanted to have this before the market opened, but everything runs late in Washington. So we'll see what comes with that. It's very exciting day.
So besides being a good trader, and I know people criticize reporters because they say, well, reporters don't tell you anything actionable. They just tell you what, you know, today's newspaper. But these guys are on top of every fundamental development that happens out there. They're my go-to for fundies, and Adam's one of the best. So you could follow them at Forex Live, go to their website, or Adam directly at FX_button. That's it for Thursday, everyone. See you for the NFP tomorrow, and don't just count your pips, count your blessings. Enjoy the rest of your day. Thank you again, Adam Button, and enjoy the rest of your day, partner. Adios.
Thanks.